All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Friday, February 1st, 2019. January is in the books. One of the best Januaries in the last 30 years. I think it is the best Januaries in terms of percentage gain, following the worst December in 30 years. So you can see how quickly things can change and how we have to adapt and flip on a dime. Let this be a lesson. Remember, October, we were very bearish. November, December, very bearish, and that worked out really well. We did have an expectation for maybe a little bit of consolidation or bounce, and then the next big leg down. That didn't happen. Not only did that not happen, we noticed some things. The same things we noticed up here that concerned us, we noticed here that got us bullish, and that was instead of worsening market internals or market breadth, even before this dip, we saw improving market breadth and internals. And we've talked about it every day, almost every day. So I'm not going to go into it too in depth right now. When we talk about T2108, small caps, breakouts, the health of the stocks we're watching, still improving, still looks really well. And on top of that, we've had a decent earnings season. I wouldn't say, one of the best earnings seasons ever, but we've had, considering we're in a bear market, we've had a pretty good earnings season. So all these things considered, we are still bullish going into February. Now that could switch very quickly, and we're prepared for that. But in the meantime, we are basically not only net long, we're almost exclusively long right now, even though we're very extended. That's the concern going into February. We are extended. We've had this big run, but we're seeing no signs as of yet of slowing down. We've only had really two consolidations in here, and both of them, we get like a week consolidation, and then boom, next move. This week, the best case scenario we talked about is happening. That's pretty good when every week we lay out a best and worst case scenario, and what we think will happen. And usually it's best case scenario that's been happening, which is very good. So we're about to hit, we talked about best case scenario being out of the consolidation comes a move towards the 200-day moving average. And we're almost right there heading into, last day of the week here. We're at 270. Best case would be if we popped up here to 272, which, maybe it'll happen today. I doubt it. Amazon weighed on the market a little bit. But overall, market's looking really good heading into the weekend, heading into Super Bowl weekend. Go Rams. I've got money on the Rams, so obviously I'm rooting for them. But everything's looking good here. I like the positions we're in. We're in just entered in race. I'll talk about it in a second. I'm recording this about 15 minutes after the open, and I entered race basically right at the open. But everything looking good for the market. Historically, February tends to be a kind of flat month. So I think the number is 54 or 55% of Februaries end up being positive, which historically is not great. I think it's the third or fourth worst month in terms of how many of them end up being positive, but still over 50% of the time. So there's no real edge in seasonality for February. But the Qs here, looking decent. Down a little bit today. A lot of that is because of Amazon. Amazon is gapping down on earnings. IWM basically flat right now. So the market's looking the way we would expect. One area I want to start paying attention to is home builders. Remember, we got interested in financials after financials had a really good season. Software is having a good season. Home builders yesterday, we saw a few of them break out. I don't remember the tickers. I think one of them is Meritage Homes. I forgot what the other one was, but I probably won't be trading those. I'll trade the ETFs. And home builders are looking pretty good. We've been talking about them through this consolidation that we like them. Now it's breaking. Probably need a little bit of rest here, but we are going to start watching home builders a little closer here. So home builders are looking good. Gold continues to rise, which is really weird. I would expect gold to be pulling back right now. Hasn't done that. And I put a post out on Bulls on Wall Street website about China stocks. We are going to pay attention to China. You can see BABA broke out on earnings and is testing that 200-day moving average. Let's watch that. Yin, the ETF, looking pretty good as well. Then we've got stocks like WAI and a few others that we're going to start watching. And then we've got the IPOs, but the IPOs, most of them have earnings still coming up, even though I like Huya, I love this pattern here. Kind of a bottoming pattern, breaking out of that bottom formation continuation, looks really good. But we've got to wait for earnings on that one. Current positions, let's start with the new entry, that's Race. Now, it just broke out yesterday. Very good earnings. Look at that big breakout, heavy volume, over range. Over the key here is 200-day moving average. That's why I entered today. I could have entered yesterday, maybe a little lower price, but I wanted to make sure this level is holding. And this morning, it did look like it was going to hold. So very good risk reward. If it does fail here, take a loss. That's fine. Risking about 8 points. So entry was at 126.10. So I'm gonna have the stop around 124, somewhere around there. Maybe I'll loosen it a little bit. But target is up here at 140. So we've got about 14, if I go a little higher, 16 points, 18 points. So could end up being a big win, has a lot of momentum. Looks like it's breaking out of this downtrend and has that good momentum here. So earnings breakout set up for Race. FAS, financial, still looking very strong, popping up to 58.60, getting close to our initial target level. And if it does hit that level, I'll assess if I want to get out or see if we can get a little bit of a bigger win. Financial still very strong coming off of this down move. So looking good for financials. We're sitting on a profit here. I will move my stop to entry level. So this is another one of those good spots I like to be in where it's kind of a free ride. It's either we break even or we get the win. I love that when I don't have to worry about a loss. So FAS looking really good. Oil has kind of slowed down here, but consolidating within the range. So we're still up about 1.3 points, but we want to see that push now to 16 to grab our profit. And then BBBY up at 15.23, moving the way we want it to move, and hopefully we get that continuation here towards a 200-day resistance. And then finally Netflix, which is after looking like it might pull back here, I like the way it's moving. Entry was at 339. We're at 343, so we're up 4 points, and we want to see that thing get to the top of the range. If it gets to the top of the range, I'll reassess. Do I want to get out here? Do I want to see if we can get a bigger move? But when I talk about this reassessment, what am I using to assess if I want to take the profit here or go bigger? It's not just the stock. I want to see what the market's doing, what the sectors are doing. So if I see, big tech is looking good, the market overall is looking good, Qs are looking good, I might try to ride it for a bigger win there. Okay, so that's the positions we're in, the position we just got in. Focus list essentially remains the same. A couple of stocks here that have broke out that I want to pay attention to. One is X. Metals are starting to look pretty good. X had this weird candle on earnings. It didn't gap, but heavy volume, and it closed higher, and we're up over the 50-day moving average. So I like X. You already know I like FCX. So I'm looking to get into a metal. And what else? Facebook broke out yesterday. Kind of a weird candle on the breakout. It was an inverted hammer, but a big move. So kind of a mixed signal. But what I want to see with Facebook is, does it hold the key moving average, 200-day moving average? Apple, we've talked about. It is holding that 50-day moving average. So I think you could get into Apple just about any time. I'd like to see a little pullback just so I get a little better risk reward. MasterCard. I haven't talked about this stock in ages. MA, but broke out on earnings, and it's flying a little bit today, so I don't think we could enter, but something to watch. And then Win, we've been talking about. Earnings are out of the way. I've been wanting to get in, but now we have that break out of the bottoming formation, out of this downtrend. We've got the resistance level here at 141, so I think we could enter in this range here. So I'm going to be watching Win very closely. So those are some of the stocks I'm watching. Amazon is gapping down today, but just like Netflix, could end up being a gap down reversal. So what I'm going to watch for with Amazon over the coming days, maybe the next week here, let's say it closes down here. At some point, if it fills this gap and closes, we'll say above 16.95, I could get in, or I could just wait for the moving average here. One of those two things. Probably better for the moving average, just because we've had that resistance level to take care of. So let me adjust that. If Netflix in the coming week or two gets above 1720, I would probably look to enter. Those of you with smaller accounts, don't worry about the 1700. What you care about is the percentage gain. Because if this thing goes from 1700 to 2000, you're looking at I don't know if that would be a 20% gain, but something like a 20% gain. So think of percentage gain, not how expensive the stock seems. All right, guys, have a great weekend. I'll see you guys on Monday.